In today's video, we're going to talk about short selling and how you can potentially profit even when a stock goes down. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to subscribe so that you're the first to get all of these great stock market education videos. Today we're going to talk about short selling, so let me know, have you ever shorted a stock? Just leave a yes or a no below and let me know. I would like to see how many of you actually have shorted a stock. It is kind of a little known strategy, and that's what we're going to talk about today. Many of you might have heard this. You might have heard of, say, shorting one of the biggest stocks ever like Enron. If you go back, or MCI WorldCom, some of these huge frauds that you might hear about the big hedge fund guys making billions of dollars on. And if you're like me, when I was new to trading, it was always very strange to me. I was like, wait a minute, how can you make money when a stock goes down? I think most of us, especially if you're watching this video, you get the idea. You buy a stock, you're buying a small portion of the company with anticipation that their business will improve. They'll get contracts, they'll grow, the value of the company will increase. Thusly, that one share or 100 shares you own will go up in value. That's the traditional investing model, and it's very applicable to what we do every day in these momentum stocks. But also, many of these stocks move too far, too fast on very suspect news, especially in the last couple years. We're recording this video in 2019. Ever since 2016, 2017, we've seen so many of these low-price stocks that go from 50 cents to $5. I mean, 1,000% in a matter of a few days on very dubious news, or even sometimes these stocks only move because another stock is moving. We call those sympathy plays. Maybe a big real company has gotten a big federal government contract or something like that, and a smaller company that is in the same industry, that stock can often spike even when their prospects haven't changed, their business model hasn't changed, nothing has changed for those. Those are the type of stocks we look to short. So let's break that down. With short selling, you actually sell first. And I'm going to walk you through that. It's a very confusing topic, but remember the idea behind stock trading is buy low, sell high. That's the traditional model. Going long, it is called. When you short a stock, you simply reverse that process. You sell first and buy back later and collect the premium. So in an ideal shorting setup, you're going to look to sell a stock that is up 100, 200, 500%, and then buy it back after it collapses because the news is dubious, the company is sketchy, etc. Many of these, you might have heard of the pump and dump idea. Pump and dumps are great shorts because they go straight up and then they come back down. Now, when you short that stock, when you sell it first, you actually take a negative position. You will look at your brokerage account and it would say you have negative 1,000 shares of ABC, the stock. So then when it collapses in a profitable short selling scenario, you would buy it back at a lower price and collect the difference. So if you short at $5 with 100 shares and you buy back at $4 with 100 shares, you just made a $100 profit. Now, sounds great, especially there's a lot of sketchy companies out there. Shorting can be very attractive. But the biggest caveat with that is, remember, you have potentially unlimited losses up to the value of your account. So when you buy a stock at $1, you say you buy 100 shares of a stock at $1, all it can do is go to zero. So the worst possible scenario, going long, you lose $100. If you short 100 shares of a stock at $1, it can go to 2, it can go to 3, it can go to 4, it can go to 5, it can go to 100. So you could lose your entire account, and even with some brokers, they'll actually let you go negative equity. And in the disaster scenario, I hope none of you are ever in this situation, you can actually end up owing your broker money. Not to be too scary, but shorting is a very, very effective strategy, especially in low price stocks. But you have to be so selective. You can't short a stock just because it's up a lot. You need to do your due diligence. You need to really, really, really dig into the fundamentals, research this stock, and be sure you're entering at the right time because of that unlimited loss potential area. Shorting is amazing. I actually started out my day trading career probably 90% short selling back in the financial crisis of 2007, 2008 was an amazing time to short because all of these stocks would fade back, great backside type moves. These days, you have to be very selective and be very cautious. So let me know, comment below. Again, have you shorted and are you looking to short any stocks? Drop the tickers below. I'd love to see what you have to say and even check out your potential tickers. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.